Good morning and welcome to another weekly market review. So we'll start off with Nifty. For the week, Nifty has closed negative 1 to 3%, which in terms of absolute number is not a big drop. But when you look at the price action for the week, especially when you look at the chart per se, right, we see a long wick, which has and a fairly long wick at that, which has definitely a negative connotation. The volumes have again picked up on the higher side as the selling pressure started building up, right? And we definitely tried to move ahead or move above last week. And in fact, if you see the range of the wick, we were almost in the range of crossing the 19,600 mark, which also happens to be a fairly strong resistance zone, which we'll see as we go ahead and look at the shorter time frame, because currently we are looking at a weekly time frame. So on a weekly basis, this is the fifth week of downward close or negative close. Uh, in fact, sixth week from perspective that we have a six long wicks consistently on the chart, which is never a positive sign. Uh, and we are very close to testing out the gap region. We have actually started getting into that zone, and why it is very the reason why it is crucial is also because of the fact that gaps are supposed to be strong support and resistance zone, and a test of gap, while always is not ruled out, but it's the way we test it out is becomes important, because when we started moving up, we started moving up on back-to-back gaps, which means that we had a very strong positive uptrend, and there was quite a bit of buying pressure which continued to keep the momentum on. But as the weeks have progressed, we have started seeing gaps, and we have started seeing long wicks, and the market is kind of slowly but surely coming down. So when we convert this, or when we start looking at shorter time frame, which is daily candles, right? Though week started on a positive note, right, with a 0.43% gain, and then next two candles were positive. More importantly, Wednesday's candle looked like positive when we combined that with other sectors, or what was happening in other sectors. It looked like a positive outcome. But on Thursday, we had a fairly strong sell after a good start to the day, and that's something which is disheartening to see, because we started off at 19,500 levels, right at the resistance zone, and it looked like we can easily take out the resistance zone from there. But as the day progressed, we started looking at more bearish volume started coming in, or bearish pressure started building up, and we closed the day almost at the low point of the day. However, we were still about 50 DMA, which gives some bit of, or which used to lend some bit of support. And also, when you look at what was happening on the chart, we were trying to take support at the consolidation zone, which is somewhere at this region. So which was supposed to be a strong support zone, or it looked like we can retain positive trend till the time we are above 50 DMA. And the bounce from 50 DMA, if you see here, possibly here and here, it looked like we can possibly start resuming uptrend. But then on Friday, we saw a big gap down, a decent gap down, and then market continued to sell. And look at the spike in volume. This is not positive at all, especially considering the fact that now we are below 50 DMA, and this is the first time that we have gone below 50 DMA after uh, the rally started in late March, right? This is test of DMA, and we have now slipped below 50 DMA. We need to keep a very close eye on how the buyers are responding. As of now, it doesn't look like buyers have the ability to respond positively in the interim. And we are very close to testing out the first gap region, and these are the gaps that I was speaking about, which was not visible on weekly calendar, but on daily calendar. Look at the number of gaps: one, So we have one, two, three gaps out here, and they they tend to be very very strong support or resistance zone in this case because we had an uptrend. This should be a good solid support zone. So while market has drifted downwards, but I would consider this if we test out this region, right, which is 19,200 kind of level and another possibly 19,000 levels. If we continue to kind of rotate here, then there is a possibility that uh, we may continue to have uptrend intact. Having said that, we need to look at how the market behaves as we go along in the next week. But this is definitely not a market to get carried away as far as buying positions are concerned. Obviously, the kind of buying that we have seen and the returns that we have seen over last 3 months is phenomenal, which will continue to make one feel that every dip is a buying opportunity. But I think we should be little cautious here. Just like we remained cautious last week in last week's update. We were talking about the fact that this is a range, and if we break out of a range, which will be slightly clearly visible in the hourly chart. So this was a hourly range, but we wanted the candles to take out this level, possibly retest and go above. But unfortunately, while we went above this level with a gap, but then we immediately gave back all the gains, and we are now testing the bottom level of the range. And in fact, we've just about penetrated that. So one has to be very, very cautious here, or one has to be little cautious here, especially in the shorter time frame, because the way mid and small caps have been rallying, people have been making a lot of money by taking calls for very short term, right? Which looks to be a challenging. This is a challenging phase. I think one should not try and uh, build too many positions or too much positions right here, and especially one should be cautious of mid cap and small cap because people have been making money at the drop of the hat, and it doesn't look like this is a market where one should try and go be very aggressive or adventurous about any of those things. So broadly, this is what Nifty has done on longer time frame and shorter time frame. What can happen in the coming week uh, possibly is that we may test out this region first, which is a gap region of Friday. Uh, Stabilize here, and we'll have to see because it's a tricky zone. This entire zone is a tricky zone, so one should be cautious. One should not run and take any positions just because we print a wide range candle here. But any drop below this level and is definitely something that one should be cautious and keep a watch on. So on the positive side, no specific action is required per se, right? Because it's not going to turn around and run like this from tomorrow or right tomorrow. We are not going to see market making a quick dash here. So it may take some time to stabilize before it resolves itself if the buyers have the potential to try and build back positions right now at this point of time. But the risk that we may see something like this is now building, and the possibility or probability of this happening is far higher than 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 possibly market breaking out on the upside. So I was talking about something like this happening is higher than market trying to straight away go like this. Right? So one should be cautious below 50 DMA. We started drifting below 50 DMA, uh, and as we go ahead, we'll see in other charts and some few of the sector charts as to what is causing this kind of pain. But definitely, market is not going to turn around immediately and start moving forward. So on Friday, we had a positive close on the US indices, which is what we are following, predominantly NASDAQ. Let's look at Bank Nifty per se, because that was the first sector to have broken out and taken the market, started taking the market higher. So let's look at what is happening in Bank Nifty this week. Uh, Bank Nifty had a fairly interesting move this week. So we'll start off with a weekly calendar. So while Nifty closed negative for the week, Bank Nifty closed positive 0.9% or 0.87% to be precise for the week. Uh, no. But again, we see a long wick on Bank Nifty. We closed above previous week's closing, that is mildly positive. Volumes picked up, but with a long wick, the tone of the market is not very positive. So that's something that we need to look at. Body of the candle is fairly small, which again lends weight to the fact that the market is definitely not positive. I think within Bank Nifty, given the kind of weight that HDFC Bank has and the way it is continuing to struggle, one should kind of keep an eye on what HDFC Bank is doing, because within large cap banks, if you were to look at top four banks, which is HDFC, ICICI, Axis, SBI, uh, so both ICICI and Axis are trying to lend support, and this candle, whatever green tinge that you see or greenish positive note that you see to the candle is purely because of what has happened with ICICI and Axis to a great extent, and SBI to a certain extent. Uh, but HDFC remains to be a problem child in the entire Bank Nifty per se. Let's look at on the daily time frame as to what Bank Nifty did for the week, right? So, so week started with a mild positive zone, positive tone to it, and then Wednesday we had a very meaningful large candle, and the candle broke out this level of 44 2000, and which is the range that we had marked, that if Bank Nifty breaks that 44 2000 level, one should possibly look at adding long position to Bank Nifty, which is what happened, and gave. So sorry, yeah, so this marking is already visible now. This is the marking from last week. So the Bank Nifty closed with a decent spike, and the volumes also picked up pretty well. That gave some bit of confidence that possibly we are wanting to make another up move in Bank Nifty, and uh, the possible long positions opened up here, though we are still below 50 DMA. Right. Uh, Now on Thursday we started off well. We had a very strong first hour candle, but then we gave away most of the gains, and that is where you see this long wick to the candle. What is not so great about it is we have failed at 50 DMA and gap down. So there is some bit of tail element to the Nifty Bank Nifty on Friday, but uh, we gapped down, and we kind of came back into the breakout zone, breakout levels. So it is not a great sign purely because of the fact that we are now sustaining below 50 DMA, and it's, I think, probably, let's look at 1, 2, 3, 4, 5. I think 8, 9 days of activity below, yeah, 10 days of activity below 50 DMA, which is never positive. Uh, I and this is the chart of Bank Nifty exactly resonates with what is happening in Nasdaq as well. If you see Nasdaq chart also, I think Nasdaq has also spent close to 10 days below the 50 DMA, and we had a fairly bearish candle which got printed. We'll see that as we get to Nasdaq's review. But when you look at Bank Nifty, this is where a long position was warranted, or building a long position was warranted with a fairly small size to test out what Bank Nifty can do. But we quickly failed. We went up. It looked like there is a high probability that we may continue to move up, but then we gave away all the gains on Monday. Uh, we opened we opened here, made a new high for the day, and then just drifted down, and Friday story is not a great story at all, though there is some bit of buying that is reflecting here, and but the fact is the volumes are not so great. So this is the range that we we wanted Bank Nifty to clearly take out before. Yeah, sorry. So this is the range that we wanted Bank Nifty to take out before one can possibly think of long position, and this is exactly where we kind of petered out. The rally or the so-called buying pressure petered out, and we are back into the zone. We need to be very vigilant. We need to be vigilant of what is happening in this week with respect to Bank Nifty. Um, I think that is the driving force. So basically, it's Bank Nifty and IT, which are the two pockets of market which are showing uh, some bit of traction at this point of time, both on positive and negative side. So they are the ones which are volatile at this point of time. One should keep a close eye on them to see as to what market is likely to do over a period of next few weeks. So what can happen in Bank Nifty this week? Or what do I think? Given that we tried to take out the resistance level and then gave up easily, right? There's a high probability that we may possibly drift down again from here, come down here, and again possibly try to stabilize and try to make one more dash. But I think now very clearly this area is an area of resistance, and one should be very cautious. Uh, and I think it's better to leave Bank Nifty alone for some time till the time we see another decent wide range candle which gets printed out and we see a follow through of that candle with equally large. So ideally, if the Bank Nifty fluctuates somewhere here and prints a wide range candle here and again takes it out here, that is where I think we will again get back into a positive frame of mind for the overall market. At this time, I don't think we are anywhere close to that positive texture that we want the Bank Nifty to make. Uh, and same is the case with Nifty. Nifty, I think, has now come below 50 DMA, so we have to be cautious with what's happening on both the index. Monday, while we may again open up, and which has been the case for last few weeks that we open and there's a positive tone to the opening, but as we kind of go through the day, we start losing out all the gains and all the momentum, and we close on the negative side. So that's been the case for last few weeks. We should be careful as to what is happening in both Nifty and Bank Nifty, especially now that we have been below 50 DMA and we have failed at 50 DMA in case of Bank Nifty, and I think in case of Nifty, yeah. So Nifty we gapped down right below 50 DMA and we had a fairly large bearish candle out here. It has engulfed the entire positive action that we were trying to put through last week as far as Nifty is concerned. So caution is the word for the coming week, and possibly start cutting down positions on individual stocks which are not doing well. Because I think in this rally, the kind of rally that we've seen, uh, if a lot of stocks have not outperformed the indices purely on technical basis, one should cut down if you're holding basis certain fundamental theory and factors that you think basis which you have made a position out there in those stocks. You can take your call, but as far as the technicals are concerned, if you're not being able to outperform the indices over last 3 4 months in specific stocks and they have started giving back to the market, I think they are the weaker stocks. One should look at trimming down position, and that's precisely what I would also do on Monday. So this is broadly Nifty and Bank Nifty. I think in both the cases, wait and watch. Slightly more bearish than anything to do with the kind of bullish uh, undercurrent that we saw on Wednesday. Uh, but markets are markets, so one has to be vigilant of what is happening in market rather than having a opinion and getting stuck to that opinion. This volume spike is definitely a cause of concern in Nifty. Now let's look at what is happening in broader indices, which is Nifty 500. Can CNX. Yeah. So in case of broader indices, again we see a long tail candle. This is one of the sorry, long wick candle. This is the longest wick that we have seen for a long period in a long period of time. Uh, Definitely not a positive indication. Obviously, given the high weight of both Nifty or the large cap Nifty 100 in the CNX 500, I think CNX 500 would have close to 72 to 75% weight of large cap, which is Nifty 100. And given that Nifty 100 itself has a fairly negative undercurrent, it is not surprising that we are seeing a long wick uh, on CNX 500. And clearly, we are seeing CNX 500 consolidating within this flag pattern. One would be better off being cautious and let us see what Nifty CNX 500 does over the next couple of weeks. But this is the kind of range that CNX 500 is trying to kind of work with at this point of time. Daily time frame, again, as I said, with the kind of weight that large caps have on CNX 500, Thursday's Nifty and Bank Nifty reflection gets reflected here with a wide range candle, and again Friday's selling pressure adds here to another negative candle, but we are well within the consolidation zone, and above we are above 50 DMA. This is one of the few indices which is still above 50 DMA, courtesy what is happening in small and mid cap. So broadly, I think uh, undertone is negative, or the undercurrent to the market is negative. Uh, but one should not get fixated with the opinion that it is negative or positive. You should always keep an eye on price action. But it would serve one well if they take a call as to what is happening and how their positions are behaving as the market prints each of these candles, whether positive or negative. Let's quickly look at a few of the larger components of indices. We'll do this on daily time frame. So uh, IT is above 50 DMA, but still in stage one, has been consolidating here for almost 17-18 months, I guess. Yeah. So yeah, so this is close to 15-16 months is what I would believe. 474 days. Yeah. So this is close to 15-16 months of consolidation, which we are seeing in IT, and it's yet to take out this consolidation zone. Uh, but one good thing is at least we are seeing higher. Now we are seeing higher high, higher low in some format, and possibility that IT would try to break out before someone else is purely dependent on what happens in Nasdaq. So one should keep an eye on few of these heavyweights as far as the index composition is concerned to see what is happening in the indices. So IT is above 50 DMA, but still in consolidation zone. There is no reason why we cannot do this, just like we have done this, right? So we have done this and consolidated here and tested out 50 DMA and trying to move above. Let's see what can happen. So I think this is one index which you should have in your radar, or should have on your radar, purely basis the kind of price action that we are seeing over longer time frame. This is one index which is above 50 DMA and is showing some signs of stabilization, but not yet out of the woods. Bank Nifty we have already seen. Let's look at what is happening with metals. Metals on a daily time frame is again consolidating. Yeah, so is above 50 DMA and consolidating here and in a range. I think we can clearly see a range out here, and let us see what this does. Adani and Adani Group stocks have fairly large weight to the metal index, and with the kind of news flow that we are seeing in Adani, the market is index is also reacting accordingly. But when you look at few of the stocks within the index, I think there's some bit of negative undercurrent in Nifty Metal as well. Let's look at FMCG, which is another larger weight. So FMCG below 50 DMA in a range. This is stage 3 consolidation, which can easily resolve into breaking down or breaking out. One has to again keep a close eye on here. CNX, this is another large weight or the sentiment driver of the index below 50 DMA, trying to stabilize in this consolidation zone, which is what Bank Nifty also is trying to do. But rejection at 50 DMA, not a very positive. Let us see, can it form a contraction pattern out here and then tries to break out or break down. The next 500 we've seen auto, which was doing exceedingly well, has now started showing consolidation. Uh, Again, testing 50 DMA and couple of times it's tested 50 DMA. So while nothing wrong with this index, but you know, it is in stage three. Nifty we've seen, metal we've seen, small cap doing extremely well, continues to remain in stage two, continues to print higher high. Uh, so pharma, which is in strong stage two, has now started giving back some bit of gains, and so it's above 50 DMA, but clearly it has given up a bit of gains, and look at what it is trying to do from a larger time frame context. It is trying to test out, can it also come and test 50 DMA? Yes, possibly. But one good thing, at least with pharma, is that we have now printed a higher high. Do we come here and print a higher low before we start moving up again? So that's something that we need to be watchful of. Uh, so there's a pivot which we can form. Can the pivot form here? Highly probable. So we are at support zone. Let us see how the index reacts in the coming week as far as this support zone is concerned. But I guess there is a probability that we can form a. This seems to be a much stronger and valid support zone for Nifty Pharma. Consumer durable, which continued to do well, is again far above 50 DMA. Is fairly sorry. Let's convert this into, yeah. So it's above 50 DMA. It's took a halt at the long-term resistance, and this is a zone where it broke out and it tried to move higher, but it's consolidating and coming and trying to, can it test 50 DMA, and then we'll see what happens with this index. Nifty infra, yeah, again some kind of range and stage three formation out here. CPSC ETF, which is all the PSUs which have done exceedingly well with the possibility of privatization of few of these stocks, including bank stocks, and uh, again a range is forming here. PSU banks, which were doing exceedingly well, and there was continuous positive news flow around them, have again started consolidating in a range. So if you see the overall texture of the market, whether it is every sector that we have done, reality which has been doing well is again started correcting. There's a pivot which is formed here. It's now at 50 DMA. Let's see what happens in the coming week. But overall, the texture of the market, if you see, most of the indices are either below 50 DMA or testing out 50 DMA, and the response around 50 DMA is not so great in each of the indices. This essentially leads to the fact, or at least with some estimation, if you have to make, it says that one should be very cautious rather than trying to be positive or aggressive about it. one should cut down, or cut down on negative loss making positions for sure, and not allocate fresh money to small and mid caps, which is where a lot of money has been allocated over last 4 5 weeks, or last 2 3 months per se. So this is broadly what is happening in the Indian markets. Let us look at this in the context of what is happening uh, in the US markets, and which is where. So let's look at Nasdaq. Stage 2 resistance, downward sloping resistance. It's exactly corrected from the resistance, a long wick. Though close is not as negative, or while the close is not at the lower end, but the candle is not very positive, especially when we convert this into daily chart. I think this can be possibly a better way of looking at it. If you were to convert this into daily chart, look at this wide range candle. This is definitely bearish, and at the kind of selling pressure that we are seeing, we are just we've just taken support here, but more importantly, we there is a strong rejection at 50 DMA, right? Uh, so clearly, breakout or breakdown next few days and weeks are crucial for Nasdaq, and if Nasdaq dips again from here, I think IT will definitely have a test of 50 DMA. The IT index, Nifty IT, will definitely have a test of 50 DMA, and we may possibly see some bit of downward pressure, uh, steep downward pressure coming in Indian markets as well. But that's something that we'll have to assess on a daily basis rather than trying to take a call. But one should be aware of what is the probability or possibility. So this is what we thought can happen next. Last week when we were trying to review Dow Jones, the broader index S&P 500, and look at what we are doing. This is daily candle. So we started off on a positive note. Again, a strong rejection at 50 DMA, right? And some sense of buying is buying has come back, but it has not too much of relevance in the context of the fact that now when we look at what is playing out on a technically important parameter, which is rejection of 50 DMA. This is the first rejection. There can be many more such tests of 50 DMA before we fail. But just like Bank Nifty and CNX 500 and Nasdaq, we are seeing a negative pressure as far as emerging markets. Kospi below 50 DMA, well below 50 DMA, and fairly strong negative undercurrent testing 200 DMA. Chinese market, nothing much. Dollar index is rising again. This is not so positive. But in any case, we should not look at all these. I think it's just a factor. I think what we should look at Asian markets. Nikkei is down. Uh, Stage 2, lower high, lower low on daily charts. European markets, consolidation going on. Test of 200 DMA on daily. Hang Seng is clearly down. So I think this is broadly what we need to look at for the week. I think Nifty below 50 DMA, wide range candle on the downside, pressure increasing with higher volumes coming in. Bank Nifty below 50 DMA for last 8 10 candles, trying to move up, but strong rejection is what we are seeing at the resistance zone. So Nifty IT not doing as well, though it continues to consolidate within that stage one. But if you look at other indices, overall the tone of the market is bearish. small and mid caps will continue to kind of do their own thing because it's driven predominantly by feel good factor and the recent past experience of investors that keeps bringing in more investors into the market, and they typically go out and buy small and mid cap. So that is where we are seeing positivity, but I think one should be cautious from here and definitely keep an eye on what is happening in their individual stock portfolios. So that's the review for the week. Have a great weekend. Thank you.